Joining us with markets, Brad Kooima with Kooima Kooima Varilek. And Brad, let's talk about this cattle market. Certainly it has felt better. And the cash market, it looks like maybe we're putting a bottom in, you think?
I sure do, Michelle. I think last 2 weeks where you saw a packer that was willing to take on inventory in that 180, 181 slot, I thought was encouraging. Got a packer that's got some margin. You're even hearing a few Saturdays getting at it. And then the last week's action, I was very encouraged, especially at the end of the week. Friday afternoon bids around here got better and better to the point where there was even a little bit of 184 bid, largely passed, by the way. A few of them took it. And I know in some cases those cattle went this morning already on a Monday morning. So the firmness in the cash is encouraging. The other thing I like about the cash, and I've said it over and over, is the north is current. The weight problem is not in the north, and usually that's where it is with the farmer feeder, but it is not the case now, and I think that's a great sign. This time of year, if the calf crop's cleaned up, we should have a little bit of good going before we get to the yearlings.
Last week, a big up week in both live and feeder cattle futures in terms of the higher weekly closes. So can we build on that?
We need a little technical jazz here to get the funds to come back, right? This should be a good start. Big weekly reversal up. New lows last week, Monday, remember that day? And then came all the way back and closed a lot higher for the week. Great sign, and I like the leadership in the feeder cattle as well. I'd like to see December cattle above 179.50. That might trigger a little bit more fun buying or short covering from some of the shorts.
And what do you think about fourth quarter, the deferred contract starting to build maybe a little premium? Is that an indication that the numbers are going to get tighter there?
To me, the fourth quarter is going to come down to currentness and what we do with cheap feed and high break evens. In my mind, there's no doubt that there's less supply, particularly as you get late in the fourth quarter and into the first quarter. People can argue with me, but my whole thinking comes back to you've slowed down the cow kill finally in a big way. Year to date, down a lot. Okay, now what are we going to do with the females? We've had 2 years back to back, record-setting years of how many heifers we fed as a percentage of steers. This cannot continue. I mean, these cow guys either have to start to save some heifers or go out of the business. So this is somewhat subjective, but I talk to all kinds of cattle people, and there is some regional disparity, but generally across the north, there is heifer retention getting started. So if you take that heifer and make a grower up and make a cow out, or we don't have to feed it. The last 2 years we fed such a high percentage of the heifers. I would say that could change overall supply by 5% or more if that all falls the way I see it. So there's always a black swan to worry about. You guys know that. We've lived through that. The other thing that I started there with that preface, though, is I think we're in good shape going into the first quarter next year. I really do. We can screw it up by feeding some high break evens if we aren't at that price, like we did in 2015. We lost our leverage. We had less cattle for most of 15 than we did in 14, and got a lot less for them because we had no leverage. So watch how many cattle we're killing and try to do our best to stay current here. The risk is there with cheap feed, of course. So I'm not saying that that's what I expect. I'm just saying that that's the other side of the coin here, and we have to be sensitive to that.
Thanks so much, Brad Kooima with Kooima Kooima Varilek.